There's a saying in this country that goes, he whom you expect to be Moses turns out to be the Pharaoh. That's a saying that is quite famous here, and it talks about the unexpected. Last week, we talked about the black swan and how that refers to the improbable or the unimaginable. That's why the business of forecasting is quite a double-edged sword. We can analyze trends and examine facts, but experience has taught us not to have expectations, concrete expectations, that is. That's why the outcome of Thursday's Monetary Policy Committee meeting is not to be taken for granted. But facts are that for households, high interest rates is welcome, while for business and for growth, the less the rate, the better for the economy. Good evening. You're watching the Business Insider here on Nile TV International, and I'm Ayman Salah. Our weekly program tackles events affecting economies and business, and we aim to bring you the inside story. We'll be back. Welcome back to the Business Insider. I'm Ayman Salah. First, we start with some news items that we thought might interest you over the week. First one goes, Morgan Stanley announced that the country's debt level has been categorized as manageable. This week, it announced that it was putting the Debt Service Suspension Initiative, or DSSI, countries in focus and placed them into three main groups, or categorized them into three main groups. The first are those that have manageable debt levels and have access to borrowing markets or can tap existing International Monetary Fund programs, such as Egypt. The second category, where fiscal finances are worsening, requiring either an extremely supportive external backdrop or new IMF support to get through. And the final group includes those currently in default. All right, with us on the line is Dr. Ashraf Saleh, finance professor. Dr. Ashraf, a pleasure to have you with us on the show. Talking about...
The pleasure is mine, thank you.
All right, talking about Morgan Stanley's categorization of countries and placing Egypt's debt in the manageable category. How do you see that?
Actually, I see that this is quite reasonable classifications, because when you see that the Ministry of Finance has announced that the government aims to decrease the public debt as a percentage of GDP gradually over the next 3 years to even reach less than the level that was achieved before 2011 by the end of the fiscal year 21-22. And it's also added that the percentage is expected to reach, the public debt as a percentage of GDP is expected to be around 77.5 by the end of June 2022. So this sounds very reasonable for the classification that you just mentioned during the report.
Where does it place our economy vis-à-vis foreign direct investments?
I'm sorry, can you repeat the question again? I did not hear you quite well, I'm sorry.
Where does this place our economy vis-à-vis FDIs?
This will definitely increase the FDI, and this will probably give more convenience, stability to the international investors, because nowadays they are looking for the potential markets, and with the strive of the majority of the Arab countries, Egypt seems to be a very good potential investment opportunity. But hopefully that the Minister of Finance as well as the Ministry of Investment will work a little bit on easing the procedures of the new investors or of the FDIs generally. Because from one side, we sound that we have a potentiality, but from the other side, we still have a lot of difficulties and a lot of procedures in investing in Egypt.
Dr. Ashraf Saleh, finance professor, thank you very much for joining us and thank you for your insight, along with credit rating and the stable credit rating that we have been witnessing for the past few years. Definitely this will add to your assessment. Now for the next news item, we have something of interest and is quite sought for a long time, and that is Egypt's introduction of a pre-registration system for shippers. Yes, shippers. Now that means that the country is rolling out a pre-registration system at seaports around the country. According to the Finance Ministry, importers, customs agents, and other handlers need to set up an account with the customs authorities' new national single window for foreign trade facilitation. Once registered, importers will be required to submit information on shipments before loading and obtain a unique advanced registration number. Egypt will experiment the Advanced Cargo Information System, which is a World Customs Organization protocol that provides shipping lines, port operators and governments real-time information on the potential arrival of goods. The system will be mandatory in ports by July and is part of formalizing the informal sector. Coming up next, what to expect in the Monetary Policies Committee meeting on Thursday. Stay with the Business Insider. Welcome back. You're watching the Business Insider. I'm Ayman Salah, and tonight I'm joined by a professional lady, Sahar Damati. She is a banking and economic expert. A pleasure to have you on the show with us tonight.
Thank you, sir. It's my honor.
And we're talking about interest rates. It is interest rate week, and we are expecting the Monetary Policy Committee to meet on Thursday, which is tomorrow. Analysts are divided on what to expect. We'll watch this report and then we will resume our discussion.
Meets on Thursday to review interest rates. Most analysts expect rates to be left unchanged, while a few have read into the National Investment Bank's slashing of rates on investment certificates as a sign of future rate cut. Rates have been untouched since November, and a senior research analyst sees the CBE will try to preempt a wave of inflation to support the fiscal budget and boost trade and economic growth. Others say the cuts witnessed in 2020 are enough for now, and that the CBE has been conservative with its liquidity injections this month, causing a slight increase in the interest rates, and is likely to continue its conservative approach and hold off on making any cuts due to the slight growth in money supply since November. International economists say that a steady interest rate is just what the market needs right now, and that the MPC will hold off on marking further cuts until the second half of the year. Yet, there are those who perceive mounting pressure due to the rising yields and relatively weaker coverage in the last government T-bill and T-bond auctions. This is coupled by the decreased banking sector liquidity, as well as global economic uncertainty, notwithstanding the continued volatility of sectors such as tourism and exports that also pose interest rate pressures. However, some see that larger cuts could be needed if inflation and growth fall below forecasts. That means if inflation rates fall beneath 6% or if GDP growth rates drop below forecast. Other factors are at play when looking at a steady rate. That can affect foreign exchange inflows by offering attractive yields to foreign investors. With competition rising in the region, attracting inflows is a priority for the Monetary Policy Committee. So can we safely forecast, or can we put aside our expectations and wait for the news?
Welcome back to the Business Insider. Sahar Damati is our guest tonight. She is a banking and economic expert, pleasure having you on the show. And first of all, let's take your take into what was said in the report. I understand that you agree and disagree in some parts. So is it safe to forecast or should we wait?
Okay. Let me answer the first part of the question, which is the macro level of forecasting. Forecasting is core for any business, for putting strategy, for putting a number of scenarios according to which you can mitigate different risks in your business, in your life, in your future, whether you're talking being a company or a country. So forecasting is core. And accordingly, you adjust yourself according to these scenarios. So I very much work with forecasting.
All right.
Okay. The point is here we're talking about whether interest rate cuts whether the monetary policy is going to apply further interest rate cuts, or whether the monetary policy committee is going to say, well, I will maintain. To answer this part, I think the core issue is on what basis, or what are the parameters that you work with in order to take such a decision. Primarily, we're talking here about the inflation. So, what is the actual inflation and the expectation for the future? So that's core part. So when we talk about the inflation, I think Egypt has done a great job in coming down with inflation from a high of above 30 when we did the floating of the exchange rate to what we are right now, below 6% across last year altogether. And actually, being across last year below that level is also below the targeted level of the central bank or the monetary policy, that is 7 plus minus 2%.
7 to 9%.
Yeah, this is where we are. So the point is we are way below. So this is the situation today. Expected January to be the same because there hasn't been...
But let me interrupt you here. We are below the range, the inflation range set by the Central Bank of Egypt.
Yes.
7 to 9%. We are at 6%.
It's 7 plus 2 minus 2.
Right.
Okay.
So we're at 6.
Currently, yeah.
Currently, we're
Around
at 6. Is that due to what? Less demand, the current situation? There are other factors that affect the inflation rate. It's a double-edged sword, if you will.
Egypt has undergone an economic reform program. This has been endorsed by the International Monetary Fund and the World Bank, and according to which a lot of measures has been put in order to deal with all the structural problems of the economy, the current exchange rate system, and actually the fact that Egypt was depending to a very high extent on what we call subsidies. Subsidized products, subsidized everything, which costed the country a lot of money. Starting the reform, you've adapted a new exchange rate, and then immediately you started cutting the subsidies across 3 to 5 years, which you have done successfully. So I would say that what happened was a cost-push inflation. By cutting the subsidies. This is number one. Number two, interest rates at that time, in order to unify one system for the foreign currency and to completely abolish the parallel markets. So you have undergone a number of measures as well, because no country can survive nor have a good investment climate having two systems for foreign currency. So
two foreign exchanges.
Exactly. So in order to do that, you have used the tools that is available for the monetary policy in order to curb the increase that happened to the prices due to the factor I just mentioned, number one. So the inflation went up to a very high level of above 30%.
At the time, yeah.
32, 33%. So put a system to curb inflation. By doing that, you've increased interest rate effectively to 19.75 when it comes to lending, and 18.75 when it comes to deposits. Okay, this was a corridor range, as we say. In addition, of course, to a number of other tools, but the interest rate was the main tool, and people still think only in terms of interest, though it's a lot of other factors as well. Having said that, so the cost push factors that took place was the reason for the inflation. It's not because of the normal demand supply, that okay, there is an increase in demand for a product leading to or seasonal inflation like what happens in Egypt and Ramadan.
Due to the reform process.
Of course.
Right.
Of course, primarily.
So when you're talking to the household, the layman, if you will, you have a high interest rate is attractive for the household because you put your money, you get a high interest on it. However, it has other effects. So let's talk about the effect of the current interest rate on the household and on inflation, and what would a decreased interest rate mean for the economy of the country?
Okay, so you're asking two questions here.
Right.
The first question is the impact on the household, which actually, let me start by saying that we have total deposits and certificate of deposits in the country in an amount of 4.7 trillion Egyptian pounds, out of which the households contribute to 70%. So this is a very high level. A lot of people, when they go to, a lot of people put their money in banks, and they used to put their money at 20% interest, 17, 15, it went down to 14, 12%, 12.25, and now 11. So of course, this is affecting them, but at the same time, we have to look at something. Inflation rate is currently in the neighborhood of 5%, let's say 5-6%. So you're giving them 5% above this, which is 11%. This is the current interest rate. And this is a very high interest rate, and done only in the banks that are considered the arms of the monetary policy, that is National Bank and Bank Misr. So this is done in order to help those people be able to survive with the interest they receive out of their deposits, number one. In that sense, I think, though it went down significantly, however, inflation was curbed across the last few years. A lot of things have happened in order to boost the income level of those people. Like, for instance, the umbrella of Takaful and Karama, special program under the ministry, like increasing the pension funds by over the years a number of times. A lot of things are giving to the people in terms of, let's say, housing.
You're talking about incentivizing.
And incentivizing.
Right.
These things help. I believe in that sense, if you look at the whole package, yes, they are only looking at the 11%, but they are overlooking the other incentives they received over the years.
But here you have to categorize the social categories, if you will, because when you're talking about the middle class, those who have the money in the banks and relying on the interest rates, they are not those that are targeted by programs such as Takaful and Karama.
But a big category of that, out of this 70%, there is a huge the pensioners. Those is a big category. It's not a small category. I don't have the categories with me right now, but as far as I know, it contributes significantly. So in that sense, you are really helping them out to survive. Right. And you've done the job by curbing inflation to a level below the targeted level, which was the middle of 7%. Right. So this is one thing. Now, another thing that will help is that, let's look at the positive side. By decreasing interest rate, it has a number of effects. Number one, you are decreasing the cost of funds, the cost of getting loans, the cost of getting credit facilities from banks. And this will enable different companies or different sectors within the economy, and Egypt actually is extremely diversified sectors, to be able to increase their capacities, to be able to grow their business, to be able to open new business, invest more. By investing, by increasing capacity, by replacement of current machines with new ones, by all of doing that, you're helping also unemployment. So actually across the last year, because since 2016, which is the beginning of the flotation, until today, interest went down by 10.5%, which is a big amount. So it became easier for the investor to borrow money from the banks, which is very important. When you do that, you add to the GDP. By adding to the GDP, you add to growth. And this is where Egypt, because of its, I would say, aggressive economic policy, they were able to boost investment. Egypt today, as a matter of fact, is considered one of the best countries for people to come and invest in. And this is because of two factors. Number one, you have the acknowledgement and the trust certificate of all international organizations, IMF, World Bank, Bloomberg, Morgan Stanley. Everybody is talking about the success of the economic reform. Hence, we're talking here about, and also the credit, Moody's, Standard & Poor, and Fitch, all of them.
Where does Morgan Stanley's categorization of Egypt's debt level come in?
Yeah, this is where it comes in.
Right.
Because during this very heavy year, where with all the world has been affected by COVID-19, growth rates in some countries became negative, zero. I mean, there's no growth rate. People are sitting in their houses, they're not working.
In developed economies.
Even online in developed countries. But Egypt was able to make some kind of what we call a balance between taking care definitely of the people by putting the proper measure in order to curb and to mitigate the effects of the COVID-19, at the same time not stopping the economy. It was aggressive, and hence at a certain point, at a special point, we used to be 5.6% growth of GDP, which was prior to COVID-19. And then because of COVID, we went down to approximately 2. Now we're 3.6 and going upward.
During COVID-19?
Yes, sir. So this is the positive side of the policies that have been adopted by the government, as well as which was together aligned with the monetary policy. This answer, I think, the first part of the question.
Right.
Coming to the expectation, what do you think interest rate will be in the coming period?
Right.
Or tomorrow?
Right. What would be the decision? Will it go for further cuts? And if not tomorrow, what to expect in the near future?
Actually, it is quite expected. It is expected that the inflation rate will remain within the target of the central bank. So we said from the beginning, we're talking 7 plus 2 minus 2. We will maintain that. We still have a room here. Putting into consideration why I'm saying this, because there are factors that started to change. One of the factors, for instance, is the price of oil. The barrel of oil used to be, went down to 20 level. We're talking right now 55 Brent oil. So this is a big development. A lot of countries do rely on importing. So this is going to increase demand and will lead to an increase in prices, definitely. Hence, I'm saying that even though this is in the horizon, plus other factors, I see, and commodity prices, it's another factor. Commodity prices went down a lot across the last period. Now we're seeing the trend changing. probably it will move up again. So we have two factors that will fuel inflation. So the question would be, it will fuel it to a level above the target of the central bank or within the target. What my point of view, I see it as so far this will take some time. So I still believe that we will still be within the target range of the central bank when it comes to inflation. Hence, right now, central bank have two choices. Either to make the final cut.
The final
cut for this year, or maybe one of the final cuts, one or two cuts coming more, by, let's say, going down 50 bips maximum.
basis points.
Basis points, yes. Or it will stabilize the rate as it is, and we need to see the impact over the coming 45 days. So this is the other thing. Of course, the cut always, as we say, it will help investment. Especially there are a lot of investors coming to Egypt now. It will help the government budget because one of the items of the government budget is the interest rate is quite high. So the more you decrease interest, the more it impacts the budget positively, and hence it will leave money for development of school, for all other
and also for consumer borrowing.
Consumer borrowing, definitely. Consumer borrowing, as well as mainly all the different sectors in the economy, companies, small and micro enterprises, it will become very, very attractive.
Small and micro enterprises, those are job creators, especially in governorates that are booming, and Upper Egypt is one example.
They are, of course, across the world. SMEs are the main driver, or considered one of the main drivers for curbing employment. So
decreasing interest rates
is very
would
helpful.
be a catalyst of growth for SMEs,
Yes,
for job creation.
definitely. And in other factors, don't forget that we have a parallel market that is not within the formal sector. We have an informal sector that is not yet included within the formal sector. So this...
Is there an estimate for this informal sector?
Well, I heard a lot, actually. I mean, we're talking here between 40 to 50, 60. It's somewhere in this range. So if you imagine Egypt with the lower number I mentioned, which is a 40%, then you're talking about completely different numbers for our GDP, for everything. It's a completely different number. But the point, what I'm saying is that interest will be quite an enhancing point for them to start borrowing. This will decrease the informal sector. In addition to this, it will boost employment. So that also is a very important factor for them. Add to this, it's not only this, add to it the recent amendment to the law of taxes, which have been approved by the president and announced, I think, around 2-3 weeks ago. Rates that are given in terms of taxes are very, 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 very low. I mean, I've never imagined they would go that low. But I think it's like opening the door for the informal to come into the formal sector and to be able to portray real Egypt in the future.
Where is our competitive standing vis-a-vis other emerging markets?
In terms of FPIs or in terms of economic growth?
Here I'm more interested into the current interest rates and how decreasing it will favor your position or enhance your position vis-a-vis your competitors.
Okay. Here we're talking primarily about FPIs and FGIs. FGIs, which is a foreign direct investments. FBI, those are foreign, which is what you call the hot money. I mean, so those are the two arms. or the two elements here. I think decreasing interest rate is very important for them and very attractive in terms of credit, of course.
For FDIs.
For FDIs. But there are two important factors here. Why an investor would come to Egypt and not go to another emerging market? Number one, the level of risk of putting the money in Egypt is low. The higher the risk, this is going to push away all the investors. So we have a measure or a ratio called the CDS. And the CDS of Egypt is one of the best among the emerging markets, which says what in a word? That the credit rating of Egypt is encouraging for investors, number one. Number two, when it comes to the FPIs, those who invest in T-bills and stock market and so on, why do they come here? Because here in Egypt you still have a very attractive interest rate. You have a very good mechanism for them to come in, all of those funds and so on, and come and put their money, invest in T-bills, get their money out, and this has been working fine. So in order to prove what I'm saying, as a matter of fact, across the last, since we started the flotation, we started with a period of 0 FPIs. And then it moved up to a level of 23 or 20 billion dollars. And then it went down again to 0. Now it's the highest level, between 23 and 25 billion dollars coming back to the countries. The FPIs. When it comes to FDIs, we're seeing a lot of investors from the region coming to Egypt.
From the Gulf, especially.
Yeah, that's what I'm saying, the region. So, a good risk country and good opportunity for profit. That's the reason.
And that's where the Monetary Policy Committee comes in.
Oh, and the Monetary Policy Committee, the government. It's unified, it's a teamwork.
Sahar Damati, banking and economic expert. Pleasure having you on the show.
Thank you very much. It was my pleasure.
And we'll wait and see what comes out from tomorrow's meeting. But certainly, tax reforms is something that Ms. Damati touched upon. And this is what we will be discussing next week here on the Business Insider with a very special guest. I'm Ayman Salah. Thanks for watching.